Okay, I'm going to show the process of marking new week opening gap. Okay, so let's see. In fact, I'll just take a different chart. Let's see, Euro JPY. Okay, and so look at the week, right? And this is the current week, so I can just check like this, right? The closing of previous week, which is the bullish candle body close, is the closing, and the new week's candle opening. It's at the same level, so there is no gap. Okay, then we have this one. Here we closed here, right? Sorry, here. This is a bearish candle close. Next week, this is the open price of the bullish candle. So here we have a gap. So I've marked it, but to refine it and just check that everything is clear, I can go back, right? And that should be Sunday. Yes. So now to refine it, if I actually see that closing price is here. Okay. What am I doing something wrong? Wait. Yeah. Okay. So here it is, right? So cancel this one. Here is the closing price, and the opening price is one sec. 1 week. Happened. Closing, opening. We have to go way back. I think. Yeah. Is the one or the here? Yeah. So this that gap, not that one. You see, I marked this, but it went to that point, obviously. But here you see the closing price and opening price. That is very important. You look for closing price. So I'm looking at 15 minute. I can go to 5 minute, any time frame, right? Just cross validating and refining it. So here, this down close candle body is close, and here open and drop, right? So this is open. Sometimes this will be bullish candle. So let's say this is the bullish candle, which is gold for me. Then this is the open because it opened, then it went. So that gap is just a void. Okay, this is the actual gap then. But in this case, both are bearish. If this was, let's say, bullish close, this previous candle, or let's say this was not there, this candle golden one is the one. Okay, then I would mark the closing price. Closing price for a bullish candle is on top. So that will be my gap. Okay, so this is now my gap. So now let's see in future what if prices come to this level. Well, not yet, right? So this gap was never traded. But that is how you mark the new week gap, new day also. You can mark the same way. Just look at the day, daily candle. Okay. So here there was close open is same. Then this is close open, same, close open, same, close open, same, same, close open, same. No, there is no gap in daily on this chart, right? So euro yen. Okay, maybe we'll go to another one, USDG. So here there are gaps, right? The gaps can be of two types. See, one is this, very obvious, right? This is close, bullish candle, open, bearish candle. This is the gap. You're seeing this up and down. Gap doesn't mean that it's just visible gap like this, like a volume imbalance. This is also the gap, but it can be an overlap situation also, right? Like it opened, it went up and then went down. It's still a gap in a lower time frame. Here, this is the gap, right? Here, this is the gap. So these are new day opening gaps, right? Here there is a gap. This is an obvious one. It's also a liquidity void. Here also there is a small gap. The small gaps don't matter, right? But this gap is significant. See how many times price has traded into that gap. It may be this gap also. This is also, it could be significant if the pips are large, right? See over here, it came back later and traded. But so for days, prior past 20 days gaps you can retain. If there are overlapping gaps, then the overlapping gaps are strong. See how it went up, traded into that gap, closed below. Next candle went low of that gap, closed below. Next candle midpoint of that gap, and now we are again coming to this. And I don't know if in a week here there were no week. There is a big weekly gap. I mean there is a gap here. It's not too significant, but this one is a pretty big gap, isn't it? So see, where did it go? I think it only marks at the weekly level, but yeah, and then this has to be divided into quadrants, right? So we divide the gap into a fib tool like this, which has the quarters, right? And then when we go inside and we see what happens inside the gap, it'll kind of you know either it'll chop around, so don't take positions inside. See, it came down again, went in, came down again, went in, right? So it will chop around sometimes here as well. But here, right? So how inside also it trades, you can see sometimes you will see that the bodies are being held below, then they went up, then they are held below, right? So it's not like you have to trade from here. It is that they will attract price, right? So when price goes too far, then it'll attract price over there. Why was this high not taken, for example, right? But you can target the low of this gap just to be safe. You don't have to go for this high in that situation. Or if you're trading away, now it's coming out and the time is right, right? And then the time is right as per your thing. You have the right pay value gap, whatever. You have some target equal lows below here. Here, see the time is right, right? So it went up and no, miss. This is just a new week opened and went up. The time is not right. It's just a sell day, but yeah, right? So here, even if you got in at the right time on that day, whenever, and your stop loss was above the new day opening gap, you would be safe for this liquidity or whatever else is being targeted, right? So anyway, that is just the new day and new week opening gap. If you have any questions about it, you can certainly tell me. But let's just also look at now the new week opening gap, what's happening, right? Like why is uh, sometimes this thing kind of important as well. So we have, uh, see here we have that gap. This is a new week gap. It is also going to be the day gap between the Friday and Monday, isn't it? But let's then go to 4 hour, 1 hour. You see this, how price behaves, right? So, so this was Monday accumulation, Tuesday manipulation, 10 o'clock reversal time, straight shot here down to the low of the new week opening gap. Why? Because it failed the first time, right? It went, see here, lower, broke it, didn't retest, went up, creating engineered liquidity, went to the midpoint. Bodies are closing at midpoint of a daily fair value gap from before. Okay, and then straight down to the low of this new week opening gap, right? Goes up. This blue line where the bodies are being held is the true open of the week. This is the true open price. Then price went lower, whatever, came back, went above the true open, Judas swing. And generally, if you are bearish, right, this is what you want to kind of see. And then you can short down for the rest of the week, right? So, like a positional thing. But of course, there is news today, so it won't happen that way. But so new week went too far, came lower, went through it, took a little bit of support, went one time up today, accumulation in Asia, London, pre-London manipulation. Distribution, now within this gap also, you will have like the market bodies. If you see the bodies, how they'll be held within the quarters of the gap, right? So here, if you see, 15 minute, 1 minute, right? So you will see how the bodies are being between these quarters. When it doesn't want to go above this right now, okay? Even though there's a wickless candle over here, and then price comes out, retests, okay? And then now it has engineered liquidity, okay? So this is new week opening, right? So I mean, you can just this, it's not some place you trade from, but it could be like a target. You know, today's manipulation. It's going to take out both sides, Monday high and low generally, right? But I think GU had taken out not with this fall, but at some other point. So anyway, you know that it will be fast and furious with distribution on on a manipulation day, right? So there'll be accumulation, manipulation, and distribution, right? So you can target this like the high, not the low, obviously, knowing that it had failed to trade and we have engineered liquidity. So you can play it like that, right? Or from here, if I when I yesterday I bought from here, I bought it till this low, right? I was not targeting anything for that because it could come back and I don't want to sit in drawdown. It did give a reaction, went up, came down, but it's in that market maker buy model, right? So that anyway doesn't matter. Came, bounced, came lower, created liquidity, manipulation, down, inside, resistance, down, and where we are right now in price, right? So again, so it won't necessarily break price every time. Like here, when it has to go through, for an objective, it will just go through, right? It's not like always it will go here and do some drama. But these are interesting points for price. So anyway, I'll keep this short. I mean, it's not short, but if you have any questions,